Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Meta Platforms Inc. quarterly report. Meta Platforms Inc. offers a diverse range of businesses and services through its two main segments, Family of Apps, FOA, and Reality Labs, RL. The FOA segment includes Facebook, Instagram, Messenger, Threads, WhatsApp. These platforms enable users to connect with friends and family, share content, and communicate through various means such as text, audio, video calls, and messaging. The RL segment provides virtual, augmented, and mixed reality products including consumer hardware, software, and content that facilitate connection and interaction. Meta Platforms Inc.'s stock price increase. A year of growth over the past year, Meta's stock price has experienced significant growth, driven by several key developments. The company's substantial investment in artificial intelligence, AI, has been a primary driver of this increase. A notable $14.3 billion investment in Scale AI propelled the stock to a record high of $738.09. Robust advertising sales and revenue growth have also contributed to Meta's success, with AI-enhanced ad targeting and increased user engagement across its platforms driving strong performance. The company consistently reported revenue growth exceeding analyst estimates, positively influencing its stock price. Increased user engagement on Facebook, Instagram, WhatsApp, and Threads has created expanded advertising opportunities, while positive earnings reports have frequently resulted in favorable stock movements. Investor sentiment has been shaped by Meta's communication regarding technological advancements, particularly in AI, attracting both institutional and retail investor interest. While recent reports of higher-than-expected capital expenditures for AI and a significant one-time tax charge led to a decline in October 2025, the overall trend for Meta Platforms, Inc. over the past year has been upward, with these positive developments collectively contributing to a substantial increase in its stock price. The primary drivers of revenue growth or decline for a company can be categorized into several key areas. Regulatory and compliance-related factors, such as government regulations and enforcement actions, changes to regulatory requirements, and compliance costs associated with new regulations, have a significant negative impact on revenue. User behavior and engagement also play a crucial role in determining revenue growth or decline. A decline in usage among younger users, changes in ad impressions delivered, and violating accounts estimation can all negatively affect revenue. Competition and market factors, including loss of revenue due to regulatory actions and compliance costs, changes to products and services due to regulatory requirements, and negative publicity affecting business operations, also contribute to revenue fluctuations. Financial and operational factors, such as currency exchange rate fluctuations, regional or global economic conditions, and catastrophic events, can also impact revenue. Internal factors, including significant investments in AI initiatives and increased expenses due to user base expansion, can also affect revenue growth or decline. Lastly, other factors such as loss of key personnel, government restrictions on access to social media platforms, and potential government action that impairs advertising sales can all contribute to a decline in revenue. Net income and profit margins decline. A shift in revenue streams. The company's net income has undergone a significant decline, decreasing by 82.7% for the 3 months ended September 30, 2025, and 9.1% for the 9 months ended September 30, 2025. This downward trend is also reflected in profit margins, which have dropped from 38.6% in 2024 to 5.3% in 2025 for the 3-month period, and from 35.7% in 2024 to 26.6% in 2025 for the 9-month period. The primary reasons behind this decline are substantial investments in AI initiatives and Reality Labs, which have yet to generate significant revenue. Additionally, increased marketing, sales, and operating expenses have put pressure on profit margins. Furthermore, a decrease in advertising revenue due to policy enforcement, ad blocking technologies, and changes in third-party policies has also contributed to the decline. These factors indicate that the company is undergoing a shift in its revenue streams, with significant investments in emerging technologies not yet yielding returns. As a result, the company must reassess its strategies to mitigate these losses and restore profitability. The company's financial performance has shown a significant improvement in its ability to generate cash. The net cash provided by operating activities has increased by $16,000 $246 million from 2024 to 2025, indicating that the company is generating positive operating cash flow. This increase suggests that the company's operations are becoming more efficient and profitable, allowing it to produce more cash than ever before. The company's debt level and interest expenses have undergone significant changes. While the long-term debt has only marginally increased by $6 in some periods, it has also seen a substantial increase of $29 billion in another period. The estimated fair value of long-term debt has also fluctuated between $27.83 billion and $28.51 billion. Interest expenses have shown more pronounced changes, with a 74% increase from $4 million to $470 million over 1 year. This significant jump is attributed to the incurrence of additional debt, leading to increased interest expenses. Overall, these changes indicate that the company's financial obligations are becoming more substantial, resulting in higher interest expenses. Management is expressing caution about the company's outlook due to various risks that may impact its business. The company faces significant competition in every aspect of its business, which could hinder its ability to adapt to changing market conditions. Regulatory requirements are also a concern, as compliance can be costly and time-consuming, diverting resources from other initiatives. Management is also aware of the potential for cyberattacks, intellectual property claims, and tax rate increases due to changes in international trade and taxation laws. These risks could have a material adverse effect on the company's business, financial condition, and results of operations. To mitigate these risks, management has implemented restructuring efforts, employee layoffs, and scaling down office facilities to pursue greater efficiency. The company is also expanding internationally, which increases business, economic, and legal risks. Overall, management is emphasizing the need for vigilance in addressing these risks to ensure the company's continued success. The company has made significant investments through acquisitions and divestitures. Notably, it acquired Scale AI for $13.79 billion in June 2025. The company also expanded its social media presence with the acquisition of Instagram in 2012 and WhatsApp in 2014. On the other hand, the company has divested Giphy in 2023. Additionally, due to Canadian legislation, it ended the availability of news content for Canadian users on Facebook and Instagram. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. Specifically, the company has a history of paying dividends, as noted on pages 8 and 47 of its financial documents. Additionally, the company has also bought back shares, with evidence found on pages 26 and 48. Concerns about inventory buildup and supply chain disruption are evident in the financial summary. The Reality Labs segment has experienced significant losses due to high inventory expenses, with estimated losses on non-cancelable contractual commitments. Additionally, rapid changes in product cycles and pricing have increased inventory risk. Supply chain disruptions pose another concern, with potential risks mentioned at various points. These include manufacturing issues with third parties, labor shortages and strikes in logistics and supply chain, difficulty engaging third parties, macroeconomic conditions, geopolitical challenges, trade disputes, and government actions restricting international trade. That concludes the financial summary for Meta Platforms Inc. Feel free to comment below, and I will be happy to answer them when possible.